Good morning. Today we will discuss the adjustment relating to income tax and also the treatment of income tax in the final accounts of companies. Okay. The first adjustment is the adjustment relating to tax deducted at source. Okay. While talking about the adjustment relating to the income tax, the first one is tax deducted at source. Now, under the Income Tax Act, it is the duty of the payer of salary or interest to deduct tax at source before they are paid and deposit the tax collected to central government within a specified time. So, under the Income Tax Act, it is the duty of the payer of salary or interest to deduct tax at source before they are paid and deposit the tax collected to central government within a specified time. So in this case, the journal entry is salary or interest account debtor to bank to tax deducted at source. So the journal entry in this regard is salary or interest account debtor to bank to tax deducted at source. Okay. So the first adjustment, that is tax deducted at source. So it is as per the Income Tax Act. Now the journal entry is salary or interest account debtor to bank to tax deducted at source. Okay. Now regarding the accounting treatment, at the end of the year, tax deducted at source, that is, this will appear on the credit side of trial balance, should be shown in the balance sheet under other current liabilities in the note to accounts. Okay, you know note to accounts, and again you know other current liabilities in the balance sheet. That is one of the items in the balance sheet of company. Now at the end of the year, tax deducted at source, which will appear on the credit side of trial balance, it should be shown in the balance sheet under the head current liabilities in the note to accounts. Now similarly, when a company receives any interest from investment, so the other one is regarding the company is paying salary or interest. Now this is regarding the income to the company. Okay, so similarly, when a company receives any interest from investment, the gross amount is shown in the statement of profit and loss under the head other income. So, in the profit and loss, mainly regarding the revenue, there are two items, that is the revenue from operation and also other income. Now this thing, that is interest from investment, it will be coming under the head other income. Okay, so whenever the company is receiving any interest from investment, the gross amount will be shown in the statement of profit and loss under the head other income. The tax deducted at source in this case is shown in the balance sheet under the head short-term loans and advances. Now the details will be shown in the note to accounts. Okay, similarly, when a company receives any interest from investment, then the gross amount will be shown in the statement of profit and loss under the head other income. And the tax deducted at source in this case is shown in the balance sheet under the head short-term loans and advances, and the details will be given in the note to accounts. But on the other case, it is shown in the balance sheet under other current liabilities. Okay, you notice the difference. In case of salary interest expenses, that is regarding expenses, it will be shown in the balance sheet under the head other current liabilities, and in case it is an interest from investment, that is regarding the income, it will be shown in the balance sheet under the head short-term loans and advances, and in both the cases the details will be shown in the note to accounts. Okay, so that is the first adjustments, tax deducted at source. Okay, now the second thing is regarding advance payment of tax. Okay, so the second one is advance payment of tax. Now tax may be paid in advance. Now here the journal entry is advance income tax account debtor to bank. So the journal entry for this adjustment is advance income tax account debtor to bank. Now after completion of assessment of income tax, it will be closed by transferring to income tax account. So once the assessment of the income tax is complete, then this amount, that is advance income tax, it will be closed by transferring to income tax account. So this is regarding the second adjustment, that is advance payment of tax. In this case, the journal entry is advance income tax account debtor to bank. And once the assessment is complete, it will be closed by transferring to income tax account. Now regarding the accounting treatment, Advance tax is shown in the balance sheet as an item of current assets under the subhead short-term loans and advances. So this item, that is advance tax, it will be shown in the balance sheet as an item of current asset under the subhead short-term loans and advances. Now regarding the asset side of balance sheet of a company, mainly there were two items, that is non-current assets and current assets. And here the advance tax is coming under the current assets, and that too under the subhead short-term loans and advances. Now alternatively, it may be shown by way of deduction from provision for tax if the latter exceeds the former amount. Okay, so this is the second adjustment, that is advance payment of tax. The journal entry is advance income tax account debtor to bank, and regarding the accounting treatment, it is shown under the head current assets under the subhead short-term loans and advances. Okay. Now next is the third one, that is provision for taxation. Now income tax is payable in the assessment year on the income earned during the previous year. Okay. So the income tax is payable in the assessment year on the income earned during the previous year. The income tax department will complete the assessment long time after the close of the accounting year. So the assessment will be complete only after a long time from the close of the accounting year. So the company estimate tax payable, and on this basis it will make a provision for taxation. Okay. So the income tax is payable in the assessment year, but it will be based on the income earned during the previous year. Okay. The income tax department will complete the assessment long after the close of the accounting year. So usually the company will estimate the tax payable, and usually on this basis it will make a provision, and this provision is called provision for taxation. Now we will see the journal entry for this. Okay. Now the journal entry is profit and loss account debtor to provision for taxation. So when the provision is provided or provision is made, the journal entry is profit and loss account debtor to provision for taxation. Then once the assessment is complete, then the provision for taxation account debtor to income tax. Okay. So once the assessment of income tax is complete, then another entry will be passed, that is provision for taxation account debtor to income tax, and thereby it will be closed. So this is for making the provision, that is profit and loss account debtor to provision for taxation. Then finally when it is complete, then it will be transferred to income tax. So provision for taxation account debtor to income tax. Then income tax is a charge against profit. So as it is a charge against profit, it is shown in the profit and loss account. Okay. So this is shown, or the provision for taxation is shown in the profit and loss account simply because income tax is a charge against profit. So hence provision for taxation is treated as an expense in the statement of profit and loss. So as it is a charge against profit, this provision will be treated as an expense in the statement of profit and loss. Now provision for taxation will appear as liability in the balance sheet under the subhead short-term provisions under the head current liabilities. So this is regarding the accounting treatment. Okay. So provision for taxation will appear as liability in the balance sheet under the subhead short-term provisions under the head current liabilities. So there is a head current liabilities, and under current liability there is a subhead, that is short-term provisions, and under short-term provisions this provision for taxation will be shown. So this is the third adjustment, that is regarding provision for taxation. Okay. So these are the three main adjustments regarding income tax. One is tax deducted at source. Tax deducted at source in the case in the journal entry aanu salary or interest account debtor to bank to tax deducted at source. Okay. Then idila at the end of the year tax deducted at source should be shown in the balance sheet under other current liabilities. In the accounting treatment പറഞ്ഞിരിക്കുന്നത് ഫൈനലി നമ്മൾ ഇവിടെ കാണിക്കും ബാലൻസ് ഷീറ്റിൽ അതർ കറണ്ട് ലയബിലിറ്റീസിൽ ഡീറ്റെയിൽസ് നോട്ട് ടു അക്കൗണ്ടിൽ കാണിക്കും. അവിടെയാണ് ഈ ടാക്സ് ഡിഡക്റ്റഡ് അറ്റ് സോഴ്സ് കാണിക്കുന്നത്. ദെൻ ഇത് സാലറി ഇൻട്രസ്റ്റ് പേയ്മെന്റ് അല്ല എക്സ്പെൻസിന്റെ കേസ് ആയിരുന്നു. ദെൻ രണ്ടാമത് സിമിലർ കേസ് പറയുന്നത് ഇൻ കേസ് ദ കമ്പനി ഈസ് റിസീവിംഗ് ആൻ ഇൻകം ദാറ്റ് ഇസ് ഇൻട്രസ്റ്റ് ഫ്രം ഇൻവെസ്റ്റ്മെന്റ്, അങ്ങനെയാണെങ്കിൽ ഗ്രോസ് എമൗണ്ട് സ്റ്റേറ്റ്മെന്റ് ഓഫ് പ്രോഫിറ്റ് ആൻഡ് ലോസിൽ കാണിക്കും അണ്ടർ അതർ ഇൻകം. ഓക്കെ. അതിൻ്റെ മേലെ വരുന്ന ടാക്സ് ദാറ്റ് ഇസ് ടാക്സ് ഡിഡക്റ്റഡ് അറ്റ് സോഴ്സ് അത് ബാലൻസ് ഷീറ്റിനകത്ത് ഷോർട്ട് ടേം ലോൺസ് ആൻഡ് അഡ്വാൻസസിലാണ് കാണിക്കുക. എക്സ്പെൻഡിച്ചർ ബേസ്ഡ് ആണെങ്കിൽ അതർ കറണ്ട് ലയബിലിറ്റീസിലാണ് കാണിക്കുക. ദെൻ ഇൻ കേസ് ഇൻകം ബേസ്ഡ് ആണെങ്കിൽ ഷോർട്ട് ടേം ലോൺസ് ആൻഡ് അഡ്വാൻസസിലാണ് കാണിക്കുക. സോ ദാറ്റ് ഇസ് ദ ഫസ്റ്റ് അഡ്ജസ്റ്റ്മെന്റ്. Then comes the advance payment of tax. Advance payment of tax in the journal entry, advance income tax account debtor to bank ആണ്. Then assessment complete ആയാൽ അത് ഇൻകം ടാക്സ് അക്കൗണ്ടിലേക്ക് ട്രാൻസ്ഫർ ചെയ്തിട്ട് ക്ലോസ് ചെയ്യും. അതായത് അഡ്വാൻസ്ഡ് ഇൻകം ടാക്സിനുള്ള അക്കൗണ്ട് ഇൻകം ടാക്സ് അക്കൗണ്ടിലേക്ക് ട്രാൻസ്ഫർ ചെയ്ത് ഇറ്റ് വിൽ ബി ക്ലോസ്ഡ്. ദെൻ ഇതിൻ്റെ അക്കൗണ്ടിങ് ട്രീറ്റ്മെൻറ്റ് അഡ്വാൻസ് ടാക്സ് ബാലൻസ് ഷീറ്റിൽ അണ്ടർ കറണ്ട് ലയബിലിറ്റീസ് അതിൽ വരുന്ന സബ് ഹെഡാണ് ഷോർട്ട് ടേം ലോൺസ് ആൻഡ് അഡ്വാൻസസ്, അവിടെയാണ് കാണിക്കുക. ഓക്കെ, യൂഷ്വലി കറണ്ട് അസറ്റ്സിൻ്റെ താഴെ സബ് ഹെഡായിട്ട് വരുന്ന ഷോർട്ട് ടേം ലോൺസ് ആൻഡ് അഡ്വാൻസസിലാണ് അഡ്വാൻസ് ഇൻകം ടാക്സ് കാണിക്കുക. ദെൻ പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ ആണ്. ദെൻ പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ്റെ കേസിൽ വരുന്ന ജേർണൽ എൻട്രി ആണിത്. ദാറ്റ് ഇസ് പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ട് ടു പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ. ഇതിൻ്റെ കാരണം പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ എന്ന് വെച്ചാൽ ഇറ്റ്സ് എ ചാർജ് അഗെയിൻസ്റ്റ് പ്രോഫിറ്റ്, അതുകൊണ്ട് അത് പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ടിലാണ് വരിക. സോ പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ട് ടു പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ. ദെൻ അത് കഴിഞ്ഞ് അസസ്മെൻറ്റ് കംപ്ലീറ്റ് ആകുമ്പോൾ അടുത്ത എൻട്രി വരും പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ അക്കൗണ്ട് ടു income tax. Okay, then provision for taxation charge against profit ആയതുകൊണ്ട് it will be shown as an expense in the statement of profit and loss. Then accounting treatment പറയുമ്പോൾ provision for taxation balance ഷീറ്റിൽ liability സൈഡിൽ under the subhead short term provisionsലാണ് വരിക. അതായത് ബാലൻസ് ഷീറ്റ് ലയബിലിറ്റി പാർട്ടിൽ കറണ്ട് ലയബിലിറ്റി ഹെഡിൻ്റെ സബ് ഹെഡായ ഷോർട്ട് ടേം പ്രൊവിഷൻസിലാണ് നമ്മൾ എന്ത് കാണിക്കുക, പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ കാണിക്കുക. ഓക്കെ, ഒന്ന് പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ സ്റ്റേറ്റ്മെന്റ് ഓഫ് യൂഷ്വലി അത് അഡ്ജസ്റ്റ്മെന്റ് ആയിട്ടാണ് വരിക. നിങ്ങൾക്കറിയാം അഡ്ജസ്റ്റ്മെന്റ് ഷുഡ് ബി ഷോൺ ഇൻ 2 places. ഓക്കെ, അപ്പോൾ ഒന്ന് സ്റ്റേറ്റ്മെന്റ് ഓഫ് പ്രോഫിറ്റ് ആൻഡ് ലോസിൽ കാണിക്കും ആസ് എൻ എക്സ്പെൻസ്. രണ്ടാമത്തത് കറണ്ട് ലയബിലിറ്റിയിൽ ഷോർട്ട് ടേം പ്രൊവിഷൻസിനുള്ള സബ് ഹെഡിനകത്തും കാണിക്കും. ഓക്കെ, സോ ദിസ് ഇസ് ദ ട്രീറ്റ്മെന്റ് റിഗാർഡിംഗ് പ്രൊവിഷൻ ഫോർ ടാക്സേഷൻ. ഓക്കെ, നൗ വി ക്യാൻ മൂവ് ഓൺ ടു എ പ്രോബ്ലം. So this is the question. For the year ended 31st March 2014, provision for income tax has been made for rupees 80,000. Advance payment of tax for that year amounted to rupees 60,000 and tax deducted at source on income earned by the company amounted to rupees 3,500. On October 12, 2014, the assessment was complete and the tax liability came to rupees 94,000. Advance payment of tax for the year ending 31st March 2015 was rupees 68,000. The company made provision for taxation for the year ending 31st March 2015 amounted to rupees 1 lakh. Show necessary ledger accounts for the year ending 31st March 2015. So this is the question. I'll read once more. For the year ended 31st March 2014, provision for income tax has been made for rupees 80,000. So last year provision 80,000. Now advance payment of tax for that year, that is last year's advance payment of tax amounted to rupees 60,000. That is last year's advance payment of tax means it is related to the current year, that is payment of tax for the current year. Okay, and tax deducted at source on income earned by the company amounted to rupees 3,500. So this is based on income earned. Now, on October 12th, 2014, the assessment was completed and the tax liability came to rupees 94,000. That is, the actual tax liability is rupees 94,000. Then advance payment of tax for the year ending 31st March 2015. That is, this year's advance payment of tax. That is relating to the next year. Okay, so advance payment of tax for the current year, it actually relates to next year. So this year's advance payment of tax is rupees 68,000. Now the company made provision for taxation for the year. So current year's provision for taxation is rupees 1 lakh. So the provision for taxation for the year ending 31st March 2015 amounted to rupees 1 lakh. Now you have to prepare necessary ledger accounts for the year ending 31st March 2015. Okay, now we will do the problem. Now the various accounts include, one is provision for income tax account, next is advance income tax account, then income tax deducted at source account and also the income tax account. So here this necessary ledger account includes mainly 4 accounts. One is the provision for income tax account, then comes the advance income tax account, then income tax deducted at source account and also the income tax account. Okay, we will see one by one. So first of all, we will do provision for income tax account. So this is provision for income tax account. Okay. Now in provision for income tax account, now the opening balance is rupees 80,000. Okay. On 31st March 2014, the provision for income tax is rupees 80,000. So the opening balance is rupees 80,000. Okay. We wrote the opening balance, that is by balance in 2014 April 1st. Okay, so on April 1st 2014, the opening balance, that is by balance brought down, is 80,000. Then on October 12th, when the assessment was complete, the actual income tax was rupees 94,000. So the journal entry is provision for income tax account debtor to income tax. So this is the journal entry when the assessment is complete, provision for taxation account debtor to income tax. Okay. So provision for income tax account debtor to income tax rupees 94,000. Then again current year's provision, that is rupees 1 lakh. Okay, the company made a provision for the current year rupees 1 lakh. So here the journal entry is profit and loss account debtor to provision for taxation. So in provision for taxation account by profit and loss account. So by profit and loss account 1 lakh. Okay, so these are the items. Opening balance 80,000. Then current year's income tax, that is the income tax assessed for the year, 94,000. Then current year's provision 1 lakh. So current year's provision will be the closing balance of provision for tax account. Okay, so the provision for taxation, provision for income tax account will be having a closing balance, that is of rupees 1 lakh. So this is the new provision. So the closing balance will also be rupees 1 lakh. So opening balance, then current year's provision, current year's actual income tax, then again current year's closing balance. So here the total comes to rupees 1,94,000. Now when you balance the account, there is a surplus, that is a surplus of rupees 14,000. It will be transferred to the surplus under the statement of profit and loss. Okay, so provision for income tax, the closing balance is surplus of rupees 14,000. So this is one account, provision for income tax account. Okay, now we will move on to the second account, that is advance income tax account. So this is the advance income tax account. Now in advance income tax account, so what is the advance income tax paid opening balance? So here the opening balance is rupees 60,000. Advance payment of tax for the year amounted to rupees 60,000. Okay, so the opening balance is rupees 60,000. So advance income tax to balance. So this is an asset, that is advance payment. So this is an asset to balance brought down rupees 60,000. Then it will be closed by, that is once the assessment is over, it will be closed by transferring to income tax account. So the 60,000 rupees is closed by transferring to income tax account. So the journal entry will be income tax account debtor to advance income tax. So this is the opening balance 60,000. Then after assessment, the advance income tax will be closed by transferring to the income tax account. So here it is stated that after completion of assessment, it will be closed by transferring to income tax account. Okay, so advance income tax opening balance, then transfer to income tax rupees 60,000. Now the current year's advance payment of taxes, advance payment of tax for the year ending 31st March 2015 rupees 68,000. So current year's advance payment of tax comes to 68,000. So advance income tax account debtor to bank. So that was the journal entry for the advance payment of income tax, that is advance income tax account debtor to bank. So current year's advanced income taxes, advanced income tax account debtor to bank 68,000. So here the closing balance will also be 68,000. So this is the opening balance, then closing the opening balance after assessment. Now current year's advance income tax paid, and that will be the closing balance also. Okay, so that is 1,28,000. So the total comes to 1,28,000, and the opening balance for the next year will be to balance brought down 68,000. So that is the closing balance is 68,000. So the next year opening balance is 68,000. So this is the second account. Now the third account is income tax deducted at source account. Okay, here there is only one entry, that is in the question. Yeah, tax deducted at source on income earned by the company amounted to rupees 3,500. So this is the only one item. So tax deducted at source on income earned by the company amounted to rupees 3,500. So we'll see how it is treated. So this is the income tax deducted at source account. So here the journal entry will be income tax account debtor to income tax deducted at source. So in income tax deducted at source by income tax 3,500. Now here the opening balance is to balance brought on 3,500. Now it is transferred to income tax account, that is 3,500. Okay, so this is on 2014 April 1st. At the beginning there is 3,500. Then after assessment it is transferred to income tax account, that is 3,500. So the account will be closed. Okay, so this is the opening balance on April 1st. Then October 12th, once the assessment is complete, it is closed by transferring to income tax account 3,500 and the account remains closed. There is no balance. Okay, now the last account is income tax account. Okay, now in income tax account, what are the items coming? So by provision for income tax, so this is the actual tax, that is actual tax for the year comes to 94,000. So the journal entry will be provision for income tax account debtor to income tax account. So it is already written in provision for tax. Okay, so once the assessment is complete, the income tax will be transferred to, the provision for income tax will be transferred to income tax. Okay, so by provision for income tax means provision for income tax account debtor to income tax, that is the actual tax 94,000. Then comes the advance income tax, that is the last year's advance tax which is relating to the current year. So the last year's advance tax amount was 60,000. So income tax account debtor to advance income tax rupees 60,000. Okay, so to advance income tax 60,000. Then to income tax deducted at source. So this is on the income earned, that is income tax account debtor to income tax deducted at source. Okay, so to income tax deducted at source comes to 3,500. Now, so this is the balance tax that is to bank 30,500. Okay, so income tax account debtor to bank 30,500. So the actual tax comes to 94,000. There is advance payment of tax during the last year which is relating to the current year 60,000. Then on an income there is one tax, that is 3,500, that is income tax deducted at source 3,500, and the balance constitute to bank 30,500. So this is the closing balance as per the income tax account, which comes to rupees 30,500. So these are the 4 accounts which you have to prepare based on this question. One is the provision for income tax account, then comes advance income tax account, then income tax deducted at source account, and also the income tax account. Okay, so hope it is clear to you. Anyway, thank you.